thought I would come and provide a little bit of an update what went on in the first part of the year, first quarter, and the last several weeks, which is actually very encouraging. We came off a very successful 2013. Everybody knows that the small cap NASDAQ hit new highs, and the S&P 500, the major indexes, did very well. So we started the year with a little bit of hesitation, sort of what can the market do for an encore? On top of that, you think back, we did have some concern about rates going up. We had the unrest in Crimea and the Ukraine starting to percolate. And there was a noticeable slowdown in some of the growth in the emerging markets in China. So there was a lot of concern whether are we sort of in the latter innings of this 5-year bull market. But after sort of treading water for the first few months of the year, the market has regained some footing. And surprisingly, interest rates have gone in the exact opposite direction that people anticipated. The 10-year Treasury, which is oftentimes a benchmark interest rate, was in the high 2% range, expected to be at 3% by mid-year, and it's under 2.5% now.
And was that under some additional pressure from the Fed to make that happen?
Well, the Fed President Janet Yellen did calm the markets in February, March, and say we're not lessening the tapering dramatically for the foreseeable future, and that provided some comfort that we wouldn't be experiencing a spike in rates on the short term. But one of the drivers, you say, well, what's making the market trade so well and continue to sort of march forward and higher, is you've got these low rates, as we know, and you think about the multiplier effect of being able to do financing.
Right.
Okay? We have record amounts of mergers and acquisitions, and these are not small deals. These are, $50, $60 billion acquisitions. So it has two effects. One is that when somebody's shares get redeemed because company A buys company B, you get cash in your account. What do you do with that cash? Well, typically you're going to reinvest it. So even though we've had an increase in IPOs and biotech and in social media, the issuance of new shares, of new companies, has not been significant enough to change the amount of overall shares outstanding. In other words, what we're saying is there's more dollars chasing less capitalization out there, if you know what I mean. That the overall
Yes.
value of all the stocks in the U.S. market, despite the market having doubled over the last 5 years, is only up incrementally.